Need funding for your real estate investment deal? Longhorn Investments is professional, reliable, and fast. Currently serving Texas, Tennessee, North Carolina, Missouri, Alabama, and Indiana, Longhorn Investments, LLC is a direct private lender offering short-term acquisition and renovation capital to real estate investors for both residential and commercial assets. With Longhorn Investments, you can receive up to 75% of ARV, finance up to 100% of cost, close in 3 to 5 business days, no income requirements, a streamlined, simple approval process, and no prepayment penalty. Formed in 2008, Longhorn Investments has funded over 4,000 loans since its inception and includes complementary businesses, including a title company and real estate law practice. Longhorn's wealth of experience puts them in the unique position of being able to help investors throughout all aspects of each transaction. To get started today and see why Longhorn Investments is the superior lending experience, call and speak to Lawrence Hopkins at 314-749-7616. That's 314-749-7616. Or visit Longhorn Investments at longhorninvestments.com. Longhorn Investments. Hard money lending simplified.
Universe. Media. Network.
Good day. I'm Samantha Smith with your United States real estate investing news. In 31 top United States markets, real estate investors are making regular home buyers work even harder for their property bounties, therefore worsening the current housing crisis according to new data. Quoting Liz Dominguez of RIS Media with contribution from Jordan Grice, according to a new report from Realtor.com, some markets are being hit hard by investor activities, while others are benefiting. According to the data, investors are worsening the inventory shortage in 31 of the top 50 U.S. markets. In about 19 markets, however, including Atlanta, Dallas, Baltimore, Los Angeles and San Francisco, they are actually helping to replenish the number of homes for sale. Today's buyers are facing a tough market and data shows they aren't just competing with each other. With deep pockets and more flexibility, investors can be daunting competition for the typical homebuyer. Right now, data shows investors are buying more homes than they are selling, and while they get a lot of attention in today's market, it's worth remembering that they can also contribute to inventory levels, said Realtor.com chief economist Danielle Hale. Investors typically help buyers in big metros with low inventory levels. For example, in April, investors added to the number of homes on the market in 19 of the 50 largest U.S. metros, with Atlanta, 399 homes, Dallas, 239 homes, Baltimore, 188 homes, Los Angeles, 112 homes, and San Francisco, 93 homes, experiencing the biggest boosts. For many investors, the buying strategy has changed in order to adapt and compete with traditional buyers. Our investors are used to making offers 15 to 20% below list, but now to tie up any property, they must be aggressive and give full sales price along with cash and quick closings, says Colette McDonald, leader of the Colette McDonald and Associates team at eXp Realty in Georgia. Our market's year-over-year prices, metro-wide, have increased 7% and in some areas 14%. Many investors are giving full lists with short due diligence and then asking for concessions during inspections. Smart listing agents do not allow for this, but with the pandemic, the agent population has increased and their experience and knowledge are lacking. On the other hand, in smaller markets with more inventory, investors are having more severe implications. According to the report, investors took away inventory in 31 of the largest U.S. markets, led by Phoenix, 429 homes, Charlotte, 287 homes, Miami, 256 homes, Tampa, 224 homes, and Chicago, 221 homes. I don't think the properties on the market have been on the market more than 5 minutes, even if it's a coming soon property, and I usually get between 2 and 4 investor offers emailed over to me, says Nina Hollander, broker at Coldwell Banker Realty in Charlotte, North Carolina. That's the main thing that makes it attractive to somebody, and they can generally do a pretty quick close. Investor appeal hinges on several factors, according to Hale, but they are particularly looking at how local home prices compare to rents. When home prices are rising and rents are more stagnant, investors are more likely to sell off properties and contribute inventory, says Hale. On the other hand, the higher rents are compared to home prices, the more attractive the market is to investors looking to buy homes and convert them into rental properties. End quote. New real estate technology can be quite a godsend to help streamline human effectiveness and increase salaries, but some new tech has traditional companies slowly being pushed aside, lowering revenues, in turn, helping homebuyers like never before. Quoting Alex Edwards of Dallas Innovates, since launching in 2018, the team at Nada has been hard at work. Initially, Dallas-based Nada raised around $800K from private and institutional investors to quickly garner traction for its all-in-one online solution that acts as an alternative to the traditional commission structure for selling a home. With new services in the pipeline and revenue coming in, Nada was ready to raise more funding. That led to a campaign in June 2020 with Republic, an investment platform that allows early-stage startups to raise up to $1.07 million from anyone, friends, family, fans, and the general public, using regulation crowdfunding. Republic brought its Cities program to Dallas last year as part of its mission to launch in high-growth, up-and-coming cities that are working to level the playing field for entrepreneurs. Republic Cities Dallas aims to connect with the local startup community while highlighting the companies that are raising on Republic. In just under a week, Nada raised 100% of its fundraising goal. By the following year, Nada had raised $1.8 million from 4,000 public equity investors on Republic. According to Kingscrowd, this makes it the fourth highest public equity capital raise for a real estate company since it began tracking regulation crowdfunding deals in 2017. To supplement its growth, which includes new partnerships and product releases, co-founder and CEO John Green knew he had to bring in more money. That led Nada to close a recent $2.5 million seed round from Global Millennial Capital, bringing its total equity to more than $3 million, Green told Dallas Innovates. The premise behind the Dallas-based real estate startup mirrors its name: sell your home online, pay Nada. Nada has integrated all services, realty, mortgage, insurance, escrow, into a single digital solution. So far they've launched Nada Services, a title and settlement business, Nada Loans, a mortgage brokerage, and Nada Insured, an insurance agency with co-brokerage agreements. That makes 4 business verticals under parent Nada Holdings. According to Green, that means a real estate transaction is completely transformed into a full homeowner service relationship. When a home is listed on Nada, the owner receives a full suite of real estate services for a $4,000 flat fee paid at close. They then get a full refund of that fee when they buy their next home with Nada. That's where the payment of Nada comes in. Customers using Nada to buy their home are rewarded with up to $2,000 cashback in the form of closing cost credits that help lower the money needed to become a homeowner. Nada is able to do that based on the team's support structure and use of automation to streamline the home buying process. Costs are reduced, and traditional commission fees, which can sometimes be as high as 6%, are avoided. All flat fees and services are listed up front, and Nada is only paid if the home sale successfully closes. The Nada platform fuses human and machine intelligence to power a mobile-first, consumer experience from discovery to financing through to closing and owning of a home, Green previously told Dallas Innovates. We're proud to be able to serve our community today and help folks unlock more of their equity through a low-stress process. Newly introduced from the Nada suite of offerings as home shares, a way to trade fractions of your home equity in for cash. Like retirement and savings, Nada believes that home equity is earned. Home shares acts as a way to unlock earned equity, by trading it in for cash without debt, to make homeownership more flexible. It requires no monthly payments, and the unlocked equity funds can be used to pay off debt, renovate, invest, and more. Next up for Nada is a new product dedicated to anyone interested in buying, selling, trading, financing, or investing in real estate. The program will come by way of a joint venture between Nada and Republic Real Estate, Republic's real estate investment vertical. More to come on that, Green says. End quote. A Chicago-based construction firm is placing their chips on the back of a steadily growing e-commerce boom and is looking to hit the jackpot with high-net-worth investors. Quoting the Boston Real Estate Times, CRG, the real estate investment and development arm of Chicago-based Clayco, one of the nation's most prolific design-build construction firms, today announced the launch of U.S. Logistics Fund 2, USLF2, a fund that will develop a projected $1.5 billion of new state-of-the-art e-commerce and distribution facilities across key logistics markets throughout the United States over the next 3 years. The new fund is open to high-net-worth individuals, family offices, wealth management advisors and other accredited investors, offering them the rare opportunity to invest in logistics properties, alongside institutional investors, during the strongest industrial real estate market in history. In addition, CRG is setting a target of 10% investment from diverse investors. CRG will strategically target a pool of qualified investors that includes women and persons of color. CRG President Sean Clark said he and the firm are fully committed to creating an inclusive process to facilitate improved access for traditionally underrepresented groups. We are bullish on the growth of e-commerce logistics and excited to expand access to these types of investments through USLF2, said Clark. We believe this fund is the first of its kind. It's a natural step in our firm's evolution and strengthens our position as the most vertically integrated development and building delivery firm in the country. The pandemic has fueled demand for industrial space and created new challenges for major retailers and warehouse users, including the need for modern logistics facilities to replace existing stock, which is quickly becoming obsolete due to requirements associated with today's evolving supply chain strategies. In 2020, e-commerce sales in the United States grew by 32% or $598 billion of new online sales, according to the U.S. Department of Commerce. According to a CBRE research study, each $1 billion in additional e-commerce sales requires 1.25 million square feet of distribution space to meet supply chain requirements. The U.S. logistics market saw a net absorption of 223.6 million square feet in 2020, with a record 116 million square feet of positive absorption in the fourth quarter, followed by 100 million square feet of absorption in the first quarter of 2021, bringing national vacancy rates down to 4.4%. This extended a record of 44 consecutive quarters of net positive absorption for the industrial sector. Rental rates for industrial buildings have risen 6.8% annually for the past 5 years, and asking rents increased 8.3% year over year at the end of 2020, according to CBRE. Clayco, CRG's integrated construction firm, is currently delivering more than $3.8 billion of new industrial projects for Fortune 500 clients across 21 states and opened its first West Coast regional office in Los Angeles in May. CRG opened its first Southwest regional office in Phoenix in April to support the surge in industrial growth. Our tenants are demanding modern warehouses with taller clear heights for racking, more parking for workers, and more stalls for trailer storage as they adapt their supply chains to meet the demands of consumers shopping online, said Clark. CRG leverages our experience and integrated platform to deliver these assets turnkey for our clients. And USLF2 will allow us to deliver meaningful solutions for our clients while creating value for our investors. End quote. For even more information on this very in-depth report, please see links and more in the news notes. For our quick content suggestions this week, we have 8 major reasons why you should invest in real estate starting today from Benzinga, and 15 most important real estate metrics for investors, also from Benzinga. To research further, see links and more from these reports in the news notes. I'm Samantha Smith for United States Real Estate Investor News, UnitedStatesRealEstateInvestor.com.
Let's face it, your property is ugly as ARS Construction does it right. From roofing to exterior to all your interior needs. For a free roofing estimate, call now at 844-445-ROOF. That's 844-445-7663. Or visit advancedroofsys.com. That's advancedroofsys.com. ARS Construction, roofing and construction done right.